Hey everybody, this is 𝙂𝙊𝙇𝙑𝙍 at 𝙂𝙊𝙇𝙊𝙆.com. It is Monday, October 25th, 2021. I'm fresh off of two conferences. I just got back from New Orleans, from the New Orleans Investment Conference, where we did a lot of footage from that we'll be bringing to you over the next couple of weeks, as well as a few weeks ago at the Silver Symposium. And one of the key talking points of both conferences was the outlook for the precious metals, and specifically silver, because we're in a huge supply deficit in silver right now. When we talk about shortages of supplies across the supply chain, silver is a huge one. You guys know that I've talked about the 1 billion ounces that the Silver Institute forecasted last November that we were going to use in 2021, and the fact that that seems to be coming to fruition. And that was before the investment demand from Wall Street Silver, and that movement got a lot of stackers back into adding to their stacks of silver. So I'm going to talk about that. I'm going to give you a lot of data on what the forecast looks like for silver, specifically from the Green Revolution. And we talked about this a lot in New Orleans Investment Conference. The Green Revolution, all these green policies that these governments are putting out, whether we agree with them or not, is basically irrelevant at this point. They're pushing these policies for cars and for solar and for all of this, and it's driving an enormous demand for silver. The problem is we're sitting in a supply deficit right now. And as these programs begin to be implemented this year, next year, and the year after, we're going to have massive silver shortages. So what we have to do now is turn our attention to the mining sector. We have to move left in the supply chain and see where we're going to get our supplies in the coming few years, because if we don't, we're not going to have them for investment or industrial purposes. So because this is Mining Stock Monday, I'm also going to give you a stock to look at potentially for your portfolio. Now, I'm not your financial advisor. You have to do your own due diligence, but I've done some diligence on this one, and I think this could be a pretty good one. So we're going to talk about that as well. But first, let's get started on the presentation with where are we in silver. And I want to talk about it with regards to the clean energy future. So here's a nice article written by Sprott back in February about how we're using silver in clean energy. Excuse me. This is written by Maria Smirnova. Now, people know that Sprott has gold and silver funds. They have the ability to invest in the physical through trusts, and then they also have funds through the stocks. But people also know that Sprott does a lot of investment in the precious metals stocks, and they do that because Sprott understands, first, at your highest leverage to the price, you can make more money if you have a good portfolio of gold and silver producers to the price of the base metals. But secondarily, you need to finance the next production of precious metals, because if you don't have it, then you're not going to have the precious metals to invest in. Namely, Sprott may not be able to find a bunch of silver for its PSLV, for example. So it knows it has to invest in the future. So Sprott's one of the biggest investors around the world in these precious metal stocks. This article in particular talks about silver's role as industrial metal. So over 50% of demand in 2020 was for an industrial metal, and I think that's going to climb substantially over the next few years, substantially. And here's the industrial drivers by more than 50% demand. You can see the industrial applications include solar panels, electronics, batteries, biocides, and other. Then you got investment coins and bars, 18%, silverware at 7%, photography 3%, and jewelry 21%. Three factors that will drive silver usage up in industrial demand is automotive sector and electric vehicles, including associated infrastructure, the solar energy industry, and 5th generation broadband cellular networks. Now, I have a lot of experience in 5G because I worked for a telecom for many, many years and was involved in a lot of 5G projects from a cybersecurity perspective. So I can emphasize the fact that you're not going to build 5G without silver. It's impossible. You cannot build all of the network devices, and you cannot lay all of the infrastructure without it. Here's a nice chart talking about silver used in electrical components, because silver is used in almost every electrical component produced. And talking about cars, here's how many silver components are used in the average car. You can see it's everywhere, from the instrument cluster, the parking system, the stop start. Now, it's used a lot in normal everyday cars in terms of electronic components, but when you get into EVs, which are electric vehicles, you'll see later in the presentation, as I show you some of this data, that the amount of electric vehicles expected to be built is going to increase substantially, and the amount of silver used in those has to be increased substantially from that of a regular vehicle. Another chart in here talking about historical and forecast solar capacity. So now we're talking about solar in the green energy revolution. Solar panels. Look at the increase expected by 2025. China is going to substantially increase their solar capacity. Europe is increasing it. You see also North America increasing it somewhat. Southeast Asia, Asia developed, a tremendous amount of increase in solar capacity. Now, part of the talk at the conference was the fact that they were reducing the amount of solar in solar cells. And I talked to an expert there, which follows the solar cell industry at New Orleans Investment Conference. And he said, yeah, but they've reduced the amount of silver per solar panel that they possibly can to where they can't anymore. In other words, they've removed all the silver out that they can. He doesn't think that they can remove any more silver from solar panels. So the amount of silver going into solar panels should remain relatively steady going forward, because there's no substitute for the silver used in the way it's used in solar panels now. There's no metal that would do all the things and will allow them to have the efficiency and capacity of each solar panel. So while the amount of silver is going to be basically held steady in solar panels, the amount of solar panel demand is going to absolutely explode, which means the overall amount of silver used in the solar industry is also going to explode going forward. This is a nice chart explaining how that works. That was basically it for the charts on the Sprott article. I went to another article prepared for the Silver Institute by CRU International. This is a great article for explaining the use of solar and green energy, the rise of silver and the green revolution. I'm sorry, silver and green energy, including solar. This is done in July 2018. It's a recent report, and it's got a ton of good charts. We're going to get to the first one is a chart that I wanted to talk to you about, the increase in energy usage by 2030. So we're going to go down to page 7 here. Sorry, page 6, demand for silver and green applications covered in the study. So they're expecting by 2030, the amount in auto electrical to have a steady rise. Okay, that's just auto electrical. That's not necessarily including specifically BEV cars, meaning the silver used like in the battery technology as well. There's also a little bit of increase in nuclear, although not much. I'll get to nuclear later on. A lot of people don't know this increase in uranium price and the build out of the nuclear capacity also requires silver. That's something I've talked about in other episodes, the dependence of in industry, one metal upon another or one mineral upon another. We need multiple minerals. So as nuclear power increases, the demand for silver in nuclear increases at the same time. And then of course, over here, you see, although we had a nice little reduction, we think to 2024 of the amount of silver used in solar, again, they've gotten it to where they've got the base amount of silver has to be used. And so the overall amount is going to continue to go back up. This is technology reducing silver usage to a point which it cannot reduce it anymore. This is the amount of usage expected to increase, which is going to increase that amount of silver that's going to need to be used. Then we're going to go to our next chart, which is talking specifically about solar. That's on page 10. So you can see here, electricity generation in 2017 versus 2030. They expect solar to go from 2% to 7% by 2030 in terms of total electricity generation. Now, you're not going to replace nuclear in terms of base load, but they are going to use solar and even wind in terms of increasing the secondary power. And that's part of initiatives already signed by many countries across the world that's going to go into effect right now. It doesn't require people to debate it. It's already baked into the cake. That's where they're getting these numbers from. So this is going to happen no matter what. You see basically 5% of energy generation in 2030 is going to have to come from solar. Now we're talking about energy generation that's increasing over time. So it's not just 5% addition of current energy usage, but 5% of all, including the increase in energy usage from 2017 to 2030. That's an astounding number. That's just not 5% more than we have today using the same number. It's 5% today plus the increase year over year of overall energy usage. So that means it's going to be a lot more net than 5%. So we're going to go to solar capacity by region on page 11. You can see an absolute explosion expected. Again, these deals that have already been signed, the legislation's already been passed by 2030, and the amount of increase. You can see China has a massive increase. North America has a solid increase. Europe a solid increase. And Asia, India, and Southeast Asia all have increases. Now we're going to go to page 21 and talk about silver in reactors. So I mentioned that silver is used in nuclear reactors, and then there's a nice chart here in this report by the CRU talking about that. So you get down to page 21, they're talking about global nuclear capacity. Here's the number of reactors expected to increase by region. Okay, tons. Operational, you have in gray, you have the under construction and planned. Look at China. China is investing big in nuclear energy. Eastern Europe, East Asia, West and Central Europe, Middle East. they're going to be increasing the amount of nuclear reactors, and that's going to increase the amount of silver. Now, silver in nuclear is not the biggest industrial demand driver, but again, as you go to nuclear, you have to have silver. It's going to pull the market. And that's something that's interesting. If people say, well, they're going to go to nuclear, and I don't believe the long-term aspects of solar are going to increase, even though all these deals are signed, well, you're still going to get some silver usage in nuclear. So, and global nuclear capacity has to increase to 2035 by this many gigawatts. So after a brief reduction, you can see the world has already signed deals and already passed legislation to get this much more nuclear capacity. So there's going to be solar used in nuclear capacity. It's just expected. And nuclear capacity generation by region, you can see the increase through 2022 of what has already been planned. And you can see quite a bit of nuclear capacity generation by region. You're seeing a lot of increase in some sectors like North America, Europe as well. So a lot of increase there. Now we're going to go down to slide 26. Here's a total silver demand in solar and nuclear sectors. You see the silver demand going up. Nuclear is a bit of that, but regular solar is a lot too. So you see, again, this increase, and this is an increase. Now here's a forecast total cost of ownership for BEVs, which is a pure electronic vehicle, ICEs, which is a petrol or a gasoline engine, and HEV, which is a hybrid electric vehicle. So hybrid electric uses some silver, BEVs, full battery uses more silver, and then of course, ICEs, the gasoline engines, use some and all the electrical components in the chart I showed you earlier in the chart. So no matter where we go, regular vehicles, hybrid, or pure electric vehicles, you're going to use more silver. And look at when you look at the pure electric vehicles here and the hybrids here, these two red and pink lines, they're forecasted to increase the total cost of ownership in those vehicles. So that means it's going to pull on the price of silver because total cost of ownership of the vehicles is going to go up. Silver as a component of that, the amount of silver used is going to go up, which is going to pull on silver price. The electric vehicles is expected to go down. This is the key part of the chart. As the electric vehicles become less costly, which happen to use more silver per vehicle produced, they're going to get more popular. The cost of all of these other vehicles, the hybrid and the gasoline, is going to go higher. Part of that's due to regulation. Part of that's just due to the demand, but the electric vehicles are getting cheaper. They're getting better at the technology, which means more silver overall is going to be used. Because remember, this green line represents electric vehicles, which use more silver per unit. So even though we're going to produce more gasoline and hybrid engines, people are going to start buying the fully electric vehicle because they're going to get cheaper, and that's going to put even more demand on silver. So I find that to be, an interesting dynamic here on the chart. Total global, I want to go down to the next chart here. The role of silver in the green revolution. So if you look at comparative silver use in automotive by powertrain type, again, the BEV vehicles here, the HDVs and the PHEVs use a lot more than their ICE counterparts. And then the buses, so you have the buses here, the electric vehicles use more silver. You look at the HDVs, the electric vehicle uses more silver, and then this is a regular. So the modern vehicle equals about 100 on the scale. The hybrid uses about 150. The full electric uses 200, and then it goes up. So as we move into the electric vehicle, the amount of usage just continues to increase. So estimated silver consumption of electrical vehicle by powertrain type, you can see the gasoline engines are dark blue going down, the hybrid vehicles going up, the plug and play hybrids going up, the buses going up. So as we start, and it's not just the vehicles that people buy for themselves, it's the vehicles used in public transportation that the governments are providing. Look at the amount of silver usage in that going up. Okay, also heavy duty vehicles and trucks, a lot of silver usage. So again, just talking about why we're going to have a massive increase in demand for silver from an industrial perspective because of the green energy movement. And that's not anything else. That's not an increase in general electronics. That's not an increase in medical. This has just been green energy, and why we're going to need more silver and why we're in a supply deficit now. So now I want to talk to you about the company I want to preview today. Silverton Metals Corp has been trading this year. Overall an okay chart, but they made some big moves in terms of what they've acquired. So they have acquired 3 projects, which I'll get into in a minute. They listed on OTC to get access to the American exchanges. Here is their actual announcement back in May. They're now trading on OTCs under SVTNF. You can get them on the Toronto Stock Exchange, SVTN. For those of you trading in America, if you have Charles Schwab or some of those other big brokerages, I know that they'll allow you to trade directly on the TSX-V with no additional cost. Not all brokerages do, but I know Schwab does. I know several others do as well. But if you can't get to the Toronto Stock Exchange at no additional cost on your regular platform, you can do it on the OTCs. OTCs are a little bit less liquid, but you can still get exposure. So they've done that, and they have acquired 3 projects, and they've announced the commencement of some exploration they're doing. So I'm going to go to their PDF, their presentation. I'll kind of walk you through who they are and why I think they could be a good investment. Now, before we get into Silverton Metals Corp, I want to talk about what area of the Pierre Lassan curve they're trading on. This is not a developer. This is an early stage explorer, but they have projects in past producing regions and they already have some resource listed. So it's not like they're starting greenfield. This is brownfield. And you'll see that they got their projects from another major silver exploration development company. So these are good projects, and they've acquired them for the purposes of developing those projects. When you have, sometimes exploration development companies get too many projects and they can't work them all, because each one takes money to work, and they only have so much money to spread around. So what happened is Silverton Metal took these 3 off of another company and said, we're going to focus on these in Mexico because it's in Sonora and some other major mining districts. So from their presentation, I want to talk about the creation. So in March, Silverton acquired 100% interest in 3 Mexican silver assets from Silver One Resources. Those of you who have followed Silver One knows it's a great company. They got from Silver One the Penasco 𝙂𝙊𝙇𝙿, located in Sonora State. Sonora is a major producer of silver in Mexico. By the way, silver is Mexico's top 3 producer of silver in the world, and one of the biggest silver producers in the world. And Sonora is a great place. They have one in 𝙂𝙊𝙇𝙿, also another major silver region, and then Pluton, which is in Durango. They've raised over 9.26 million with Palisades Gold Corp as the lead. So Palisades, many of you know, invests in a lot of these precious metal projects. They're one of the big investors in the space. They only have 27 million shares outstanding, which is actually excellent. The market cap is under 20 million. So you're looking at a smaller end of the scale. More risk with these companies, but also more return. If you look at the Pierre Lassan curve, you know, on the left-hand side, you get these early stage exploration. The amount of money you can make goes up substantially. You could have a 10 or 20 bagger potentially, but the risk also goes up. So you need to know that if you're going to invest in this for your portfolio. So we want to talk about Mexico. Let's talk about Mexico for a second. So Mexico is ranked #1 in silver production across the world. Here is the chart I was going to show you about the silver deficit. 3 out of the last 4 years, we've had a massive silver deficit. And that's been the biggest silver deficit dating back to where we had 4 straight years in the 90s. But look at these lines. Look at how much silver we're in deficit. It's bigger than the 90s and bigger than a couple of blips we had in the 70s. We've had sustained massive amount of silver deficits in the millions of ounces for 3 out of the last 4 years. This is not going to go away, again, because of the amount of overall silver usage in the green energy movement and overall amount of silver usage overall. And if you look at mining production of top 10 silver producing countries, Mexico is the biggest, 190.3 million ounces in 2019, and they're the biggest overall. The next is Peru, then China, then Australia, then Russia. So Mexico is the king daddy when we're talking about silver, and they've got projects in existing areas where there's been previous production that we want to look at. So now I want to look at their leadership team on the very next slide. They have John 𝙂𝙊𝙇. He's the CEO and director. He has 35 years in exploration and development, previously CEO of royalty company Anglo Pacific. A lot of people know Anglo Pacific, good company. Gordon Wiley's a director, former executive officer of 𝙂𝙊𝙇𝙍𝙍. Anybody that's been in mining knows 𝙂𝙊𝙇𝙍𝙍. So these are major companies that these guys are coming from to run Silverton and to get these projects from Silvercorp. Independent director of 𝙁𝙁𝙇𝙍 Holding. I've looked at 𝙁 before. I think that's a good company. Barry Gerling is a director, has 39 years experience. He's a director of Silver One. So as Silverton got these resources from Silver One, Barry came over from Silver One to help them out. He's got experience in the projects. It's good to see that. Gunther Rohlig has 25 years in experience in financial investment industry. He's basically one of the money guys to help get the money. Killian Ruby, CEO of Malspina Consultants, and they've got some advisors. They've got 30 years experience, geology advisor from Silver One. He's a VP of exploration director. So they're getting from Silver One, one of their head geologists. In fact, he's a VP in exploration director, and he's director of Silver One Resources. So Silverton is getting that management team over from Silver One to help them out. They're not trying to do this all greenfield with their management team. And then Peter Bourne is a professional geologist. He's a qualified person that basically signs off on all the reports. that we'll be doing. Also want to talk to you about the share structure. Those of you that like tight share structures, a lot of my accredited investors like earlier stage companies like this one that have less shares, because that means your potential for price appreciation in the shares over time goes up. So they have about 5.3 million in cash. Again, as I said earlier, only 27 million in shares, 11.6 million in warrants that could be exercised, and 2.4 million in options. So overall, not too bad in terms of overall potential for shares. Very tight share structure. Have a nice cash position to do exploration. We'll get into exploration in a moment. Number one shareholder is Plymouth Shareholders, big investment group. Silver One Resources, whom they got, okay, the projects from, have put 16% of the stock into the company. That's a big company saying we believe in the projects that we basically gave up to Silverton. And then new shareholders, including Palisade, 42%. So a lot of big financier and company ownership in the stock, which indicates that there's a lot of faith from the industry in the projects that Silverton has. Well, now we're going to go on to their projects. So starting on page 9, they have the Penasco Quemado, which is in Sonora, Pluton in Durango, and in 𝙂𝙊𝙇𝙬𝙊𝙎. Now, these are all past producing regions. In Penasco, the land package is over 3,000 hectares. They own 100% of it. In fact, they own 100% of all 3 projects. The historical M&I was 9.63 million ounces of silver at Penasco. In Pluton, they're working a 3,900 meter drill program in 2011 that they're working with to estimate resources, but they don't have those estimated yet. They're going to work on that, 6,500 hectares. And then 𝙂𝙊𝙇𝙍𝙊𝙎, they have 4.7 million ounces historical M&I and inferred 3.86. So they've got, I would say, between 15 and it looks 18 million ounces of resources, whether measured, indicated, or inferred, to start with. And they've got some surveys to start with on Pluton and 𝙂𝙊𝙇𝙬 that they're going to work with and gather additional information. Continue to go on. Here, if you look at their drilling programs, phase 1, Penasco Quemado, 1,500 meters, budget of about 500,000, 0.6 million. At Penasco, at 𝙂𝙊𝙇𝙬𝙬, 1,500 meters, about 0.9 million. That's what we're going to be spending their money on. Phase 2 is 5,000 and 3,000 meters. They're tripling and doubling that respectively at Penasco and 𝙂𝙊𝙇𝙬𝙬 at a cost of about 2.3 million. So they're going to spend about, it looks like 3.7 million between the 2 projects on drilling, which is well within the amount of money that they have in the bank. And they're going to drill about, it looks like 11,000 meters between the 2 projects. So expect in the next 6 months to a year to have a lot of drilling results out there. And we're going to know how good these projects are. And this is exciting. Again, we're not going to have to wait a year to figure out what they've got. It's going to start coming sooner than that. And you're going to start seeing some of these drill results start to come out, and you'll get a good idea of these resources from Silver One that Silverton Metal Corp got. And I think that's good news. So if you're getting an early stage, you're not going to have to hold the stock for a year to figure out whether it's going to be a moneymaker for you. You're going to find out a lot quicker. So now we're going to drop down to Penasco asset snapshot. Total measured indicated 9.63. It's in oxides, which is relatively easy to mine. It's near surface, which means I could do open pit and some at depth. Okay, which means it's going to be cheaper to get the silver out of the ground. The average grams per ton is 117. Profitable enough on that type of project. You can make, a fair amount of money at that, not having to worry about right now. They don't have their preliminary economic analysis or the feasibility studies yet, but given the amount of grams per ton, it's an oxide, it's near surface. I mean, that's where you can make some money. Don't expect super high expenses on this one. Then if we drop down to 19 to the other project, 𝙂𝙊𝙇𝙬𝙬, here's what they have here. Near surface mineralization, again, open pit with some at depth. Historical mining points to prospectivity, and they know what they've got. Measured, indicated, all the grams per ton here is on that side for you. So they've got all of those measurements there. They've got silver, they've got gold, they've got lead, they've got zinc, they've got copper. Okay, million ounces, they think 4.7 gold. They think 3,200 or 3,200 ounces of silver. I'm going to say that's 3 million ounces of silver. It looks like lead, 11.16 million pounds, zinc, 31 million pounds, and copper. This is polymetallic. So 𝙂𝙊𝙇𝙬𝙬 is cool. I love the polymetallics. Most of silver ever produced and a lot of gold produced comes from polymetallic mines as a byproduct. And so, but what you do here is you mine for the silver and then use all these other things as byproduct credits. And that reduces the overall cost of getting the silver or the gold out of the ground. And I think that's what's going to make 𝙂𝙊𝙬𝙬 really, really interesting, is that the polymetallic reduces the cost to get the silver and gold out of the ground. And And with zinc doing so well, copper doing so well, lead doing so well, those base metals really have exploded in price even faster than the precious metals over the last year. That's a good thing. It means the economics of running this project are going to be a lot more efficient, a lot better for the investor getting into it. Okay, so to recap the video, Mining Stock Monday, talking about stock Silverton, gave you the ticker symbols on the OTC and Toronto Stock Exchange. But the reason why we want to start looking at miners in 2 to 3 years ahead in the supply chain, massive, 3 of the last 4 years, massive supply deficits in silver attributed to the industrial usage and the investment demand, massive increases in industrial usage coming from the electrification of everything, but specifically the green sector, and all that stuff baked into the cake that I showed you that's already coming, already agreed to, already in contracts, already legislated. You can't take it out unless people go back and vote it all out. And that's not going to happen. Silver usage is going to smash, and that's going to pull up on the silver price. And in that article from Sprott, who's a big investor in the stocks in gold and silver, telling you why that's going to increase over the next few years. So a trusted name in the sector telling you why. Of course, my own research there and the research from CRU points to the fact that silver usage is going to go up. So again, on Gold Silver Pros, we cover supply chain from end to end. We don't just stack the shiny, which we do, but we also look at the total lifetime cycle of getting it out of the ground, moving it through the process, refinement process, and getting it into the bars and coins, because that's important. And you get your highest leverage the further left or the further earlier you move in the supply chain. So if you start to look at the miners, that can add leverage to your portfolio. It does add some risk, especially early stage exploration companies have risks that the projects may not work out, have risks that the cost may be too high, have risks that they can't get the investment. But I think with Silverton, as we saw in the presentation, previous mining, already have established resource on 2 other projects. On the second project, it's polymetallic. So they have byproduct credits, which is going to bring the cost of mining down on silver and gold that they have at a time when those 3 byproducts, lead, zinc, and silver, are doing very well. I think zinc's a 14-year high, copper is a 10-year high, I'm sorry. And then the lead is doing very well as well. So I think that there's some de-risking in this project, which is why I wanted to bring it to you. It's different from a greenfield where you don't know what's in the ground and you're just going to start to be drilling. You've got some historical measurements here. They're going to be adding a drilling program to it. So I think this is a lot less risk. So it's still early to the left on the Lassan, Pierre Lassan, sorry, chart. So you've still got that upside potential, but there's de-risking that's already occurred in this stock, which means the amount of risk has significantly shrunk. That's why I'm bringing you this one, okay, versus some other early stage explorers that we don't know right now whether they're really going to be that good or not. So I wanted to bring you this one. It's Mining Stock Monday, a little bit of education on what's going on in the green sector, silver demand, that we also got some intel from the New Orleans Investment Conference, and a potential stock investment for you earlier in the supply chain stage that could add tremendous leverage and potential returns to your portfolio. Do your own research, but look at this one, consider it if you're a mining stock investor. All right, that's going to wrap it for this Mining Stock Monday. Stay tuned. We're going to talk about Silverfest tomorrow night, and I've got a ton of content for you tomorrow night. It's going to be a lot of fun that I think you guys are really going to enjoy. We will see you tomorrow. This has been Rob King of Gold Silver Pros.
Hey guys, don't forget to hit that subscribe button and the bell for notifications, and go to goldsilverpros.com and sign up for the free newsletter so you can get your updates.